Hey guys, back with another daily update video. It's just after market hours. It's Friday, June 19th, 4:27 p.m. And I'm not too happy with myself today. I don't think I made smart plays, and I'll talk a little bit about what I did and what I didn't do. But let's just take a quick look at the big board here, and mixture of red and green on the board. But the market today, I was watching it all day long. We started off strong. We were in the green by a good amount. And then just slowly all day long, we just bled off. And I was really hoping, because we started off the day really green, and we had kind of two sideways days the past 2 days. So I really thought that we were going to open up strong and then continue to bleed up and just kind of melt up all day long and get more green. So I held off on getting rid of my shares because I thought I was going to leave profit on the table if I sold them off too early in the morning. But that was a mistake in retrospect. But let's just take a look at what happened. So it was kind of another sideways days overall, because a lot of the movers are under 1%. Even a lot of the tech stocks, Microsoft, Apple, Google, all in the red. AMD and Micron actually both ended up in the green, but very slightly, right? So again, there's pretty much sideways again for the third day in a row or so. But again, looking at the utility sector, aerospace, financial services, those sectors are getting hit hard. But it's just a weird day in the market, and I'm really hoping it doesn't come back to bite me. Because let's just take a look at AMD. If you remember from my videos from this week earlier on, I had 200 shares of AMD at a cost basis of $52.95. And I was able to sell them off for a little bit of profit, and I received $156 in stock appreciation from those shares. And I believe I sold them off Monday or Tuesday this week, if I'm not mistaken. But I had, I collected $156 in stock appreciation. I had $10,590 tied up in that stock in terms of the amount invested, or at my cost basis of $52.95 times 200 shares. So I received a 1.47, almost 1.5% return on my money for the week on my AMD positions. And then if you remember from my prior videos this week, I currently own 100 shares of Micron that I received because I got assigned shares on my cash secure put from last week. So we can talk about Micron first. So I have Micron 100 shares at $49.50 each. So, you might be looking at this graph and saying, well, it's in the green, right? You made profit. I think I messed up because I didn't take profits. I got a little bit greedy because once I saw Micron rocket up, in the morning, it was up to 56.62, and I watched it and I said, Micron's coming in strong. We're gonna bleed up all day long, and it's gonna get to 53, 54. I'm gonna cash out and make a few $100, and it's gonna be a great week and a great day. But that didn't happen, as you can see by the graph. And you can see that we really peaked early in the morning, and they just slowly bled off all day long. So all day long, I was losing out on potential profits, and I just kept holding because in the morning, I thought, okay, fine, it's just another down, and then we'll come back up. Because in the middle of the day at 1 p.m., Jerome Powell was going to give a talk, and it was some sort of committee meeting, but I watched it, and I thought he might pump the market up, so I was waiting for that, but he didn't pump it, and the market kept going down. So then by then, it was like 2 o'clock. Then I said, okay, I'm going to wait till power hour at 3 o'clock, because then the market will pump back up. It didn't do that. It bled off again, and I just kept waiting. And as I kept waiting, profits kept going down. So, I had a choice to make because it was like 3:50 p.m., about 10 minutes before the market closed. And, it was trading around $50 and like high 80s or 90 cents. So I was still profitable, right? Like if I had sold for, let's just say $50.80, because let's see, we closed the market at 50.83, right? So let's just say I sold at 50.83. I own them at $49.50, so I would have made about $133 in profit, which is not bad at all. But I was so bummed because it was up in the high 52s, and I essentially lost about $200 on the table because I didn't sell in the morning. So, I ended up not selling off. I know I said I wanted to be going into the weekend. I wanted to be all cash or as much cash as possible, but I didn't do it, and so now I still own my 100 shares of Micron, and actually I didn't make any profit on that 100 shares that I held all week, which I think that hurts me even more because I didn't even sell a covered call on it. I didn't sell the shares off. So I literally just held on to the 100 shares for a week as if I was going to go long the stock like I was a normal investor. So I'm bummed about that. If I could go back in time, I would have sold it right here in 10 a.m. But, I'm still debating. I probably should have just sold it off right before the end of the day, collected a little bit of a profit. That's nothing to sneeze at either, because $133 divided by my cost basis of $49.50 times 100 shares, that's still a return on my risk of 2.7%. So in retrospect, I just wasn't thinking properly. I probably should have just sold off, because then the other thing is I would have had that cash available to open up new puts on Monday. Now that I still own the shares, even if I sell off the shares first thing Monday morning, I'm still going to have to wait a day or two, maybe up to 3 days for that cash to settle before I can open up a new position. So I kind of screwed myself for the beginning of next week too. Although the one nice thing is, even though this Micron trade, I'm still profitable on it, right? So it could be worse. I could be in the red. So I'm still profitable. I'm hoping no bad news comes out over the weekend so that Micron opens up in the green again Monday morning. And I think I'm not going to make the same mistake again, meaning if Micron opens up green tomorrow morning, or Monday morning, I should say, I'm going to start off right then and there. I'm not going to risk, this same scenario happening again. I should have taken the profits in retrospect, but, what are you going to do? Hindsight's 20/20, and you live and you learn. But the other play I had on that did work out in my favor was my put that I had sold on IWM. And this was so far out of the money, and I got $56 in premium. Even though IWM also just bled off all day long, very similar to, this is what the whole market did, where it opened up green and then it just dipped all day long. IWM kind of came back up a little bit towards the end of the day, but then again closed down about 0.4, 0.5%. So the nice thing was that even though it closed around like 140, my strike at 135.50 was more than secure. So, I had, just to give you an idea, when I had sold that put, I think IWM was trading at 141 and some change. Even though it dipped down by about $2 today, I was so deep out of the money that was going to expire worthless. I collected $56 in premium on that. And this is for next week. Next week's premium is pretty juicy too at 135 at $172, but we'll see what happens Monday morning. So this week in total, I made the $156 from my AMD shares getting sold for stock appreciation, plus another $56 on my IWM put expiring worthless. So I made a total of $212 this week, which is not bad at all. Not bad at all. I'm happy with that, but I'm just a little bit disappointed because I could have made more. There was a point, I think maybe yesterday or 2 days ago, where I could have been up like $500 this week, which would have been one of my better weeks. But even $212, because I had, like I said, 10,590 in AMD shares for my 200 shares. And then in play, I had 13,550 on this IWM put. So I had roughly $24,140 total in play this week. So to make 212 out of 24,140 times 100, I made a 0.9% return on my capital this week, which is fantastic. So yeah, that's, I'm kind of being a little bit greedy here, but a 0.9% return on a week is nothing to sneeze at. I just hate the feeling of leaving things on the table. I guess it's just FOMO, right? Fear of missing out. But it's okay. It could always be worse in that I could be in the red, which thankfully I'm not, knock on wood. But next week is another week, and we live to fight another day. So the one nice thing is I will have that capital freed up, so that 13,550 that I had tied up in this IWM put, I'll have free and available to open up new positions come Monday. and I'll also have the money that I freed up from selling my AMD shares as well. So I'll have roughly, $20,000 to open up some more puts on Monday. The only money I have tied up right now is $4,950 in my Micron shares, and that's 100 shares, so at $49.50, so it's $4,950. But we'll see. So I do have some dry powder to open up new positions on Monday, but I would have liked to have added $100 or a couple hundred more bucks to my profit for this week. But what are you going to do? Like I said, hindsight's 2020. You can't sweat the small stuff, and I'll just move on. But let's take a look at my tried and true. I think where I went wrong this week is that I didn't open up another AMD position, because AMD's always been good to me, and I think that's where I screwed up. I think the stock market gods were kind of punishing me for not opening up more plays on AMD, and because I went with Micron, which is kind of a competitor of AMD. I think they were saying you should stick with your guns and stick with AMD. So I might listen to them next week. I might drop Micron shares come Monday and pick up more AMD cash secured puts. But one thing about AMD is that it's in the low 50s again. So I took a quick peek at the options for next Friday, and I could get in, I believe, at like $49, I believe, to collect a 0.4% return on my risk. Let's just take a quick look. So $21 divided by 4,900 is, a little over 0.4%. So that's nice. I mean, all the times I've been trading AMD for the past few weeks, I've never gotten in at AMD below 50. I've always been at like 51-ish. So I would be happy getting it at 49. So I'll probably end up selling at least one cash secured put on AMD come Monday. But let's just take a quick look at the chart on AMD. So, again, just another kind of rather boring and sideways day. But the one thing is look at the prior week or two. When AMD just traded sideways, it was just building up energy, and then it popped. So I'm really wondering if we're just building up energy again, and if AMD is going to pop up again. And if that happens, that's fine, because currently, like I said, I don't own any shares or any open positions. But I can sell a cash secured put and hopefully let that value expire worthless. But again, the market's kind of been sideways / like a little bit down for the past 3 days. So I'm still a little hesitant in terms of my plays. So I think if I do open up new positions, or I should say when I open up new positions on Monday, I'm going to be very risk averse, and I'll probably open up positions at the 0.4% return on risk, or at least somewhere around there. Just because if the market does dip, then it would take a much longer or much harder dip for my strikes to get tested. So I think I am going to play it safe again next week until we kind of figure out what's going on, because now there's more talk about the coronavirus cases surging in like Arizona and Florida and Texas. So it's just more bad news. And I mean, the whole coronavirus scare is what started this dip. So if it's going to peak again, it might be the reason that we dip again. So I'm going to play it safe for the time being. So let's just take a look. AMD's been straddling this 78.6% Fibonacci level for the past 3 days now. So I think it's at some point it's going to have to pick a decision or pick a direction in terms of, does it want to go up or does it want to go down? And if you look the past couple of weeks and months, it likes trading in this light blue area. So if I had to guess, I'm going to say it's probably going to go down. But the 61.8% Fibonacci level is at $50 and some change. So if I can get in at 49, then I should be a little bit more secure in my put, in terms of it would have to break through this Fibonacci level, which is acting as a somewhat of a support level. So we'll see about that. Let's take a quick look at Micron stock. So Micron, so you can see the spike up, that's this morning, and then this drawdown was later in the day. So, we'll see. I hope, what I really don't want to happen is for this to come and bite me in the butt, in terms of Micron dips over the weekend and it opens up deep in the red, and now I'm bag holding shares of Micron. That would be the absolute worst case scenario. I mean, what I would do in that scenario is sell covered calls on it. But, like I said, I just want to be in and out of stocks right now. I don't want to end up bag holding. And I'm still beating myself up over holding those shares. But, we'll see what happens. As long as Micron opens up in the green come Monday morning, I can get out of it immediately. So we'll see what happens. And in terms of the RSI, it is a little bit closer to the oversold category or the oversold line than the overbought. So it makes me think that Micron is going to go back up or at least stay sideways. So we'll see. But I'm not going to make the same mistake. If I see Micron at any point at like 51, 52, 53, definitely, I'm just going to sell it off. I'm not going to try and get greedy and try and lock in more gains. That was just me being greedy. Let's take a look at Disney. Disney did not do well today. So I know we've been talking about me trying to get into Disney, but the thing with Disney is, look, this is around 10 a.m. today, where it peaked around 119, and it closed $5 less at 114. And I think that's fueled because now Disney was going to reopen their theme parks shortly, but now that the coronavirus cases have spiked in Florida, there's suspicion that they're going to delay the opening. So that would mean bad news for Disney. So I think this drawdown today, this big drop in Disney, was fueled by rumors or speculations that Disney is not going to open its parks when they said it was. So we'll see. I'm not sure if that's the case, if it's going to drop even more come Monday morning or at least over the weekend. You know, if Disney releases news this weekend that they're going to delay opening their parks, then I think for sure they're going to open red or even more red than they are right now come Monday. So I think I'm going to hold off in terms of opening up a play on Disney right now, just because there's suspicion of bad news coming out. And if you look at the RSI curve, it is nearly oversold. So that would mean that it's going to rally back up. But again, this RSI curve, yes, it tells you when stocks are oversold or overbought, but it doesn't tell you how long they're going to be oversold or overbought. So it doesn't mean like the moment it goes oversold, it's going to pop right back up. If you take a look at this period here, it was overbought and then traded in the overbought region for quite some time before it finally started coming back down. So that's the one kicker with the RSI curve. And I did make a kind of tutorial video on the RSI curve, I believe last week, that you can check out if you want to learn a little bit more about the RSI. This indicator down here is called the DMI, and I just discovered this very recently. I saw somebody else using it. So this, I did a little bit of research onto it, and I might make a video about it shortly, but this is like the RSI on steroids. So you kind of have like three lines. The yellow line is what they call the ADX, the green line is the positive DMI, and the red line is the negative DMI. So my understanding, and again, I'm still learning about this, is that if the yellow line, the ADX, is higher than 25, so this measures momentum. So what you want is, you want the yellow line to be high, so over 25, and this is an oscillator just like the RSI, so it goes from 0 to 100. So you want the yellow line to be high, and then you want the positive DMI line, the green line, to be above the red line. So in a perfect scenario, you kind of want it like this here. So you want it green line on top of yellow line on top of red line. And that's supposed to be an indicator of upward trend. So actually, if you look where my arrow is right now, where it's green, yellow, red, and you look at the graph, that's exactly where Walt Disney or Disney stock popped up. So if you look at it here again, it's green, yellow, red, and it gapped up here too. And then the opposite is true. If it's red, yellow, green, then that's where it's going to draw down. So again, if you look at this big drawdown here, the DMI was red, yellow, green. So I've kind of been just checking this out because this is a little bit interesting to see if this is more accurate or it can kind of portray potential upward or downward momentum. But I mean, if we take a look here where it's red, yellow, green again, it was a start of another dip down for Disney. So it's interesting. You know, I'm trying to see how accurate or how trustworthy this is, but I always like learning about new indicators. I mean, there's so many different technical indicators out there that I just like learning about new ones and to see what other people are using. So I found it interesting, but maybe I'll make a video about it shortly. And the last stock that we want to see the graph on is IWM. You can see it's kind of been straddling this 61.8% Fibonacci level as well. The RSI curve is pretty much in the middle. The DMI lines are, again, not showing much. I mean, here's another indication where it's red, yellow, green. So that would mean it's in a downward trajectory. So again, that's when IWM has been dipping. And then here, where it kind of crosses over and it's red, yellow, green, is kind of right where IWM is coming back up. So right now it's kind of red, green, yellow. So I don't know what that means. It might trade sideways, but we'll have to see what IWM is doing, because IWM dropped a good amount because it peaked just a few weeks ago at 153. Now it's at 140. So, you know, we'll have to see. I'm hoping this is just like another blip down and then we'll keep continuing back up. I don't know, but have to see what happens. Kind of regroup and kind of reset myself this week. I think I need to get back to the basics, kind of not get greedy, just take profits when they're available. But that was my week in trading. Like I said, nothing to sneeze at. I made, well, what did I calculate? 0.9% return on my risk this week. So I'm happy with that. And if we're curious, let's just take a look at the popular stock options that were traded. So Chewy was very popular today for some reason, and I'm not sure if good news came out or what this is based on, but the 60 calls on Chewy were the second most popular stock option today. WFC was Wells Fargo. So again, I'm not sure what this is about either. There must have been some sort of news that came out on these stocks that made them so popular, because the usual suspects like Apple, you know, Apple's down here, it's not up here. AMD, you know, here's AMD, here's Micron. So AMD 55 call, Micron 52.50 call, so AMD 56 call here. So that makes me feel better that people are still bullish on AMD. Also bullish on Micron, so people think that it's going to go back up. So hopefully I can, you know, secure some profits back. But we'll have to see. You know, it's not the end of the world, because what I can do is if I can just take some quick profits on Micron on Monday, I should get cash available by hopefully Tuesday or at the latest Wednesday for me to open up more puts on and for me to use that money to make more money selling options. So it's not the end of the world. I didn't really miss out on that much profit, I hope. I mean, if Micron opens up, like if it gaps up, it opens up at 51, 52, then I would feel much better about myself, because then my patience was rewarded. So again, we'll have to see. If you can't tell, I'm really beating myself up over this. But as always, let me know if you had a good week. Let me know what your positions were. More importantly, you know, I want to know how much money are you guys making a week, meaning not just the dollar amount, but what percent on terms of your capital that was invested or that you had in play. I'm curious to see how my viewers are doing, and if they're making more or less money than me. And if they are making more, you know, tell me your secrets. But, you know, as always, if you have any questions or comments, leave them below, and happy trading.